Wow, so interesting. All right. I know you mentioned you're expanding into Asia. I'm just curious, what is that process like? So when you go into a new market like that to attract investors, what is your process to connect with the right people? Yeah, reach out to the decision makers.
It has a couple of steps. Sometimes you're lucky and you meet some locals that are connected that can give you the introduction. I call it the transfer of trust. They already know somebody and that person, and from that person sends you to another one. He refer you to this one. So you start in a different situation. If not, really you need to set up a plan where you're going to target certain investment groups, which you may find in some databases like PitchBook, Prequen, and others. And they give you some information about their allocation, what they're looking for, and so on, and some contact information, and take it from there. That way it's a little slower, but over time you can end up getting some attention. And once you get your attention, you need to travel and sit in face to face, because this is okay when you know somebody, but not to
Hmm.
create a relationship. It's like watching a movie.
Yep.
You cannot have a
Um,
girlfriend via Zoom.
exactly. Okay. Wow. Let's talk about. I see Tim put a bunch of pictures of your some of your projects in the chat here. Beautiful pictures. Share with us some of the projects that you have done and what is it that make you or what you do or the assets that you work on that's unique?
I'm not unique, my friend. I got over time, I guess I got very good on what I do. There is not a secret formula in real estate. Everybody that tells you, oh, I'm doing these other things and create these unique returns and so on, I call it this just a flat out lying. Excel can take whatever you want. It's just a painting. You can make it whatever
Right.
you want. Some people tell me, I have investors tell me, hey, this guy is offering me this deal here or there. And you're like, what are you talking about? It's impossible. How? No, look. And then you look at it. Just by look at it, probably for 30 seconds, you realize it's full of baloney. You can assume whatever you want, but if it isn't realistic, it doesn't work. At the end, properties are worth based on what they can generate. It's that simple. And how much debt you put on them, and how old are them, and the location. If you're playing with fire, yeah, you may get lucky sometimes and really and get a home run. I have had some home runs without expecting it, but in general, if you put a lot of debt, it's a lot of risk. Yeah, you can make great returns. But I'm telling you, whoever is doing that cannot sleep in peace. But if you really I did that in the beginning of my career, and there you can do some great returns. But at some point, you say, you know what, this is not worth it. It's a lot of risk. And that's when it creates a shift between I'm trying to get the investor with me to suddenly your mentality over the years shifts. And you're like, you know what? That's a wrong approach. I
Mm.
want to be on the same side of the investor. We want the same thing. And some investors say, oh, you're being now too conservative. No. My philosophy now is, hey, this guy, whoever it is, he already worked hard for the money, right? I want to sleep in peace. And I'm sure he's entrusting us with whatever capital they have. And they don't want us to do some crazy stuff, right? Not because you don't know the details, it doesn't mean the risks are not there. So in today's approach, I'm more likely, hey, newer properties, well located, low debt, already performing, bread and butter. And through that, you can have different strategies, but with the same theme, what I call focus on capital preservation, because we all know that leaving the money in the bank, you're a guarantee you're losing money.
Right. That's correct. So, in terms of location, where are most of your deals, your assets in?
In terms of investments right now, I would say the rule of thumb is to invest in the Southeast corridor, right? From Texas all the way to Florida. That's a rule of thumb because geopolitical, taxation, migration, all those things that you need to see. But that doesn't mean that you cannot find opportunities in other markets. For example, somebody say, oh, will you touch something in Los Angeles? I just got out of there. Yeah, are you crazy? However, hey, I found this thing. Let's say it's in Beverly Hills. That's not going anywhere. I can buy it for a steal. It's an opportunity. Yeah, there is an opportunity everywhere. Chicago, right? Chicago, I won't put a foot there. But if there is something that really is a steal and it's a pros and cons or value, you know what, I'm going to take a look. I saw. But so there are exceptions, of course. And even in the Southeast corridor, there are exceptions as well. You cannot buy something in the middle of nowhere, even if the things are working at the time, because demographics and things change over time. And in terms of real estate, you need time to generate value. So in that sense, it's important to take a lot of details and things under consideration. But personally, I love Texas. Texas, I think, is a great market. Florida, some areas are very good. It's growing like crazy. Georgia also is good. All the Southeast corridor is really going in a boom right now.
Yeah, no, that definitely wise. I know that you usually deal with pretty big investors, and I know more recently, are you guys opening up to more retail investors? Is that correct?
That is correct. In the past, it has been really big checks and some wealthy individuals, right? But since in Florida, I'm talking to people and having a ton of meetings with a ton of people and listening really what everybody's doing and seeing where the market is going and what's happening, not only in the US, globally. I decided that it's time to, I call it, it's time for somebody to put the foot on the ground, right? And get out of this nonsense of, oh, this guy's promising this guy's promising this, that. Let's go back to the basics and let's focus on what has been proven that works. And so therefore we created this, what I call it, for retail investors, which is accredited investors, right? These vehicles are a 506C, so they are allowed for public solicitation. But the three of them, although they're for retail, right? And the idea is that we can execute within the framework that we believe is the right way to do it. Not like, hey, I present you this and end up with this. No. We're going to do it like we want to do it. But we believe it should be done. And in that sense, we came up with three different classes of investors, right? And so we developed these three strategies that they go, you have the typical investor and say, listen, I want to protect my money, but I want yield, I want cash flow monthly. So you're like, okay, you go into multifamily, a class A building, already stabilized, probably giving you 6 to 8 yield, probably 6 to 7, right? And at the end of the 5-year holding, you may end up with a 12, 14% IRR in a great city. That's one type of investor. Then you have another investor that is like, JP, I don't care about monthly so much. I want my money to grow. I'm willing to take more risk. Thus, we develop another fund for that. And that vehicle has a unique language that it can invest in any type of real estate through different timelines and different classes, and has the ability to create a compounded effect. And it has a reinvestment process as well. That means you can buy something, sell it 2 years later, then use that to reinvest it, and so on. You can invest in land, you can invest in multifamily, you can invest in any class of real estate that when we see the deal happen, we can take advantage. And why is that important? Because there are many times that a deal shows up, and sometimes the deal is not big enough. It's a small kind of deal, and you're like, it's a lot of trouble to go and raise the money. I don't have enough time. This, you need to act fast. However, if you have had the means at the time, you would take advantage, and you can make a killing in the purchase, in the acquisition, and take it from there. And that's what this fund is. The growth fund is for that. And then you have, and this was the hardest one to be able to come up, you have the investor that says, JP, I want to invest in real estate, but I don't know anything about it because I made my money in movies, chemicals, wholesaling, tracking, anything. And I don't want to wait 5 years. I'm getting old. I don't want to invest 5 years. Forget 7 years. But I would like to invest in real estate. I would like to get some of those returns, but I would like in a short term. And I was like, wow, that's a really tough one. So that reminds me, I always tell this story. I call it the dentist story. Right? One time I had an issue on my tooth, probably 15 years ago. And I called my dentist. That was on the weekend. The guy was closed. And he said, come and see me. And I said, really? Yeah. So I was there and I said, oh, you opened this thing for me? I said, yes, JP, yes. It's very simple. If I don't take care of you, you probably would have found somebody else. And if you do, you're probably going to go with that person after that. That's why I need to take care of you. And that really resonated in my head. That's really important. So then keep me thinking, all these clients that I call the retail ones or the smaller one, because after COVID, the big clients, they decided they don't want to be partners with little guys. When they tell me, hey, I come out with 80%, you come out with 20, or we put 90, you come out with 10, and that doesn't happen anymore. And then what do you do with these clients? Or what do you do with the clients that they don't want to be 5 years, they want to be maybe 2-3 years on? And that was very hard. So we developed a product where we reverse engineer it. And where we decided to develop luxury, large single family homes in Miami. And you say, what is that so different to what you do? I said, why am I not quiet? In the sense of, we still manage an investment, it's the same process. We still need to put a team together. We have done renovations for over 100 million. And so managing a team is nothing different. But bringing the people with experience that have done this probably 100 times in the area and create a product that is financially viable by reverse engineering it, right? And created where we go with cash and we take the opportunity to begin with. And we have it all cash during the process. So then when we have permit, start beginning the construction. To at the end having a 50% LTC, it gives us such a strength in the deal, and it's very conservatively speaking. And the way we took the picture at the time is like today that vehicle will give you 17 to 22% IRR today. But it's the idea of that vehicle is that for somebody that doesn't understand that, they say how much you buy it, how much it costs to build, how much you sell it for. But in our sales strategy, we assume, hey, we're going to be the lowest level of today's market. However, if we created a table, by the moment we show that, hey, we start going a little bit higher than that, really, the sky is the limit, really, and it can go a lot higher. But the whole concept of this is that we prefer to overperform than underperform. In the past, I have had underwriting that said, hey, we're going to reach 30-something percent IRR, and we come down 5 points, and investors are not happy. You're like, are you kidding me? This is great. But because it's expectations. Today, I prefer to do it the other way. Hey, I tell you, we're going to be here. We're all going to sleep in peace. We're all going to have low debt. I personally believe it's going to go a lot better, but just believe what we're telling you. So and we're having these funds in the retail sector with a minimum investment of 100 grand.